The book is out. It's called The Business Fortress, and it's available on Amazon.
David, welcome back to the show.
Mark, thanks for having me back. It's been too long.
Absolutely. It was a long jaunt between the first time you were on, which is way back in like the first 100 episodes, I think. You made it in, episode 154, and then episode 377, where you really get into some of the tips for selling your business successfully. And I'll let you be the guy that shares the big news. Let's not bury the lead. What's the exciting drop we're making public on today's episode?
Well, Mark, you and I have known each other for quite a long time. You said since episode 151 of your podcast, which was probably like, what, 6 or 7 years ago?
I think it was right around the turn of the American Revolution, somewhere in there. I'm not,
Okay.
Years ago, yeah.
And so we've known each other for quite some time, and we've gotten to know each other very well over the years. You've been on my show for a few times. And in fact, you're the sponsor of my YouTube channel, but there's an ad at the end of every one of my videos that I play for you. And so you came to me last year, and we started having this idea about maybe we should do something together. Maybe we should write a book together, because small business owners and financial planning and the concerns for the future and retirement and the specific needs of business owners, in that business owners generally need access to liquidity from time to time, fits so well with what you do with the Bank on Yourself policies. That's why I agreed to have you be the sponsor of my show. But we started talking last year about writing a book together to kind of tie all these sorts of concepts together and create a volume specifically for people that are business owners, to learn more about how they can have a stronger, more resilient business. Okay, you want me to make the announcement? The book is out. It's called The Business Fortress, and it's available on Amazon. And it's The Business Fortress: How to Grow, Protect, and Exit Your Business with Confidence. And we wrote it together, and there's sections in there written by you and I, and of course we gave each other feedback and whatnot. But we basically talk about what makes a business resilient, what makes a business strong and able to withstand the downturns that always come. And it's funny, over the course of my career, I talked to lots of business owners, and I worked with lots of business owners. I help people buy and sell businesses. I help people evaluate businesses. The people who have been in business for a really long time will tell you that these crazy once in a lifetime events like 2020, sort of the lockdown years, these crazy once in a while events over the course of someone's life as a business owner seem to happen with a good degree of regularity.
That's right.
And it can be like an overall macroeconomic thing, the economy has a recession, or it could be your key employee becomes ill, or a key piece of machinery breaks at just the wrong time and costs a lot of money to fix or replace. It's like we always have these unforeseen, unplanned for things that happen in business. And the people that survive for the long haul, they do so by building a business that is geared towards surviving those problems. And that's sort of what the topic of the book is about, how to build your business into one of these stronger, more resilient enterprises that's going to give you a better chance of succeeding long term.
We see it as a fortress, and you're right. The 50 or 100-year floods seem to come every 2 or 3 years, which I've always wondered, why do they call them 50-year floods if they're happening every 2 or 3 years? That's a whole nother podcast, probably a whole nother book we could write. But you're right. There needs to be a fortress built around your business, because I said right before we hit record, the scavengers are circling around your entrepreneurial vision. The banksters and more, the credit card companies, the lines of credit. I see business lines of credit in the double digits, sometimes triple digits in terms of interest rates. So there must be a more resilient mindset that comes with the entrepreneur of the 21st century. Would you mind to tell our audience, what do you mean when you think about, what is the core differences in the mindset of a resilient business owner who's building his or her fortress with a moat around it, with a solid keep with treasure inside and a dragon to protect that business from, externalities? What kind of core competencies or mindset does it take to build this sort of fortress?
Yeah, sure. So I think a lot of people who are kind of starting off in business or looking at getting into business or buying a business, I talk to a lot of people that are buying a business. They get excited about the income statement, or P&L as it's sometimes referred to, and they want to know, what are the sales going to be, what are the costs, and how much money am I going to make? And they're entirely focused on cash flow and what that cash flow is going to look like when it gets into their hands. The person that is thinking about building a resilient business in a fortress is actually spending time looking at the other important financial statement, which is the balance sheet. And they're looking at, what is the actual position that my company is in, number one. And number two, what are the terms and conditions of the different liabilities and things that might be on my balance sheet? You mentioned lines of credit. So, debt, comes from different sources, but different debt has different qualities. So, for example, someone with a line of credit, they may qualify for credit from the bank, but lines of credit are typically what we call demand loans, meaning that the bank can just change the terms at any time that they want. And they can say, hey, you know what, that money we lent you, we'd like you to have it repaid in 30 days. And they can change the rule whenever they want. That's in the agreement that you signed when you undertook that line of credit. And that's very different from
Mm.
a true term loan, for example, because you can also get a loan, for example, for a truck. And the loan is going to say that you have a certain payment every month for a certain number of months. And as long as you make that payment and you're keeping, the terms of the contract that you signed, that they're going to let you keep the truck. They're just going to let you fulfill that contract. And so that's what we mean by how the terms of the debts can have different, qualities or characteristics. And it's amazing that I've well, it's kind of sad. I've met so many people over the course of time who've been in business who will tell me a story of when, sort of the tide changed on things like credit from a bank. And so they thought they had a certain situation or credit facility in place, and then all of a sudden something changed, whether it was in the economy or in their business or in the person that they dealt with at the bank, or some overarching policy of the bank that they really have no input into. I've seen it happen, for example, with people where a bank will decide that they're overexposed to a certain industry. And if you happen to be in that industry and you're a customer of that bank, you could find some of your credit facilities curtailed just because they've made too many loans to other people in your industry. It could even be in other parts of the country. They just look at their loan portfolio like an investment portfolio, and they decide, hey, we're overexposed to this. And that's nothing you could have done to change, that outcome. But what we talk about in the book is how you can look at your balance sheet and how you can consider these different sources of capital in the same way that you consider, for example, a mixture of suppliers for your inputs into your business, or how you might not want to have too much of your sales coming from one specific client, because of course that creates customer concentration, exposing your business to risk.
Hmm.
And so these are the kinds of things that we talk about in the book.
You have a sentence in the book that captures my attention. It's like you say that entrepreneurs are often too optimistic,
Mm.
and you bring up the idea that big companies have strategies that are very defensive in nature. The business entrepreneur, the solopreneur, the six-figure entrepreneur, the seven-figure entrepreneur, maybe getting up to that eight-figure level, let's say, there's a lot of gusto, there's a lot of foolhardiness. You got to be a little crazy to start a business. But what do big businesses or big companies know that little businesses should learn if we want to survive?
Yeah, I think that what big businesses understand is they understand exactly how much of their own money is in the business,
Say,
and
oh
they
yeah,
understand.
yeah. What do you mean by that? That's a really interesting way.
Well,
Their own
well,
money. Say what you mean by that.
yeah. So they look at, the return on their equity, and they understand what their cost of capital is and what they're trying to do. And big companies are always trying to maximize the return on that equity. And this is why a big company like Walmart, for example, would very rarely own its own real estate. And most people would, when they hear that, they're kind of like, what do you mean they don't own their real estate? Well, for a company like Walmart, they're trying to deliver maximum shareholder value. And so when they look at that real estate, they say, should we put a big down payment on a building whose value might appreciate very slowly, the way real estate typically does appreciate quite slowly over time, and tie up that capital? Or we could just lease the building that we want to be in, and we can save our own money for financing something like inventory, which we can turn over every 30 days and have a bigger margin. Now, Walmart is trying to maximize that return on equity, and that's what they're focused on. For a small business owner, however, they might look at that, and small business owners kind of mix their personal investment portfolio with their business. And so this is where you see small business owners will do something like they'll buy the building that their business is located in, because they'll say, I'm unlikely to move, let's say, in the next decade or so. This piece of real estate might be a good investment for me. And it gives me security of knowing that I'm not going to be displaced by a landlord that wants to, kick me out, or sell to a developer that wants to put up a big building or something like that. And the real estate might, in fact, be a good investment over time. Those are the reasons why a small business owner might want to own their property. I'm always very conscious, and I always warn small business owners to realize that when they do things like that, they are engaging in two very different businesses. They're in their operating business and the real estate investment business. But it's just an example of how different business owners are going to look at something from a different point of view, based on trying to manage risk over the long term for themselves.
So true. I mean, that's just one of dozens of insights that I gathered from your contents in the book, that we need to be thinking like the big dogs. Us small business owners can learn a thing or two from the strategies of some major businesses. One of which being, treat your real estate as a liability, not an asset in the business world. And even Walmart. I mean, they figured out a way to get terms on their inventory, so that in essence they're sitting on very little. Their own capital is not in the business. They're just raking profits out as they make sales of little gadgets and gizmos and stuff that we all have to go buy. And that goes to show too, on that same wavelength, that businesses don't treat debt the same way us small business owners do. Would you talk about your experience? I mean, how did you get passionate enough to write a book with me about this topic? Like, what was happening to the business owners that you're seeing in the world of debt management and bankruptcies and so forth, that got
Yeah.
us to got this point to where you wanted to write this book?
Well, I think one of the biggest problems with small business owners is that they don't have enough timely information, or that the quality of the information that they're using to manage their business isn't good enough. Accountants have spent hundreds of years working on developing financial statements in order to figure out what's going on in a business, and very few small business owners are using their financial statements for managing the business day to day. And the other problem they have is a lot of them don't have them up to date quickly enough to actually use them to make proper decisions. And so what I've seen happen over the course of time is that a business will have a downturn of some sort, but the business owner doesn't become aware of what's going on quickly enough. And if they've got access to credit, for example, it can often end up that they lose money for a period of time. And instead of using the credit that they have to get some kind of new efficient thing going on in their business, like if you borrow money to buy a piece of machinery that reduces your costs and allows you to serve more customers, you can probably grow your business based on that debt that you've taken on, because you become more efficient and more effective with the
Mm-hmm.
new piece of equipment. But if you are losing money and you start to finance those losses, what you start to do then is you start to just build a headwind against yourself, where now you have to start servicing those debts. And what I see happen is that people get stuck in this cycle where they start to head downward, and they're not making money. They start to accumulate the debts, and they don't realize what's happening quickly enough to actually make effective changes in the business to turn things around. And so it's that information gap a lot of the times that is creating the trouble. Um, I, it's really, really important for people to make money. Another common trap that I find people get stuck in is this whole idea of tax avoidance, where people will get towards the end of the year, they'll realize, hey, I've done quite well this year, I've made some money. Maybe I should try to spend part of my money and do some depreciation or something to hide, some earnings from the tax man. And what paying taxes is probably one of the clearest signs of success
Yeah.
in a small business.
Mm-hmm.
Like you've made so much money that the tax man wants their share of it, and that's where you really start to get the opportunity to work on your balance sheet. Because if you have surplus earnings and you're profitable, this is where you start to pay down debts or you accumulate reserves. And this is sort of a big part of the book where we talk about the importance of having a plan for what you're going to do with those surpluses so that you can actually then prepare to build this more resilient foundation. Um, when the downturn occurs, we all know what always happens. The people who have a more resilient balance sheet are able to survive the downturn, and then they go and they buy the assets or businesses of their competitors at greatly reduced prices when those people are
Huge.
desperate to raise
Yep.
money or have closed,
Mm-hmm.
right?
Yep.
And you want to be in the position where you're the one that has the resources when other people do not.
So everybody should check out the book, The Business Fortress: How to Grow, Protect, and Exit Your Business with Confidence by David C. Barnett and yours truly, old Mark Willis here. One of the stories that I didn't put in the book, so you guys are listening, you're getting an extra goodie here. It's a little tiny little solopreneur business. He was just getting his photography business going. So a starving artist type business, just clicking away, trying to get his wedding photos for his weekend, meal and that sort of thing. He starts a bank on yourself policy, a whole life policy of all things. Now, that would be quote unquote a huge waste of money for the traditional financial planner, telling him to do something totally different, like investing in the markets, whatever. But here's what happened in his situation. Because he had his whole life policy, he began building a fortress, really a moat around his income variability. That's number one. Number two, he borrowed against his policy to go buy a mattress because he was needing a new mattress. What do you know? He's a human being too. And then things got really interesting. He borrowed from his policy again after he'd paid back the loan for the mattress for some photography equipment. Okay, so now he's got this cool new lens and all these cool lights and everything. And his competitor photographer friends look at him and like, "Hey, cool new lights, cool new lens. Where'd you get all that stuff?" And he mentions that he used his policy loan from his policy to buy himself all this equipment. And his buddies, who were colleagues but also kind of competitors, said, "We need some new goodies. Let's borrow money from my client to get their equipment financed through him." So what just happened there? He just thought like a big business. He's a tiny, at that time, he's grown much bigger since then, but at the time he was a very up and coming photographer. He's now a bank to his competitors. Now think how cool that would be. How many big businesses would kill if Apple could loan money to Microsoft or vice versa? Who would win the competition in the computer wars?
I think at one time Microsoft did invest
I think you're
in
right.
Apple. Did
I
they
think
not?
you're right. Yeah, you're absolutely
I don't
right.
know if
Yeah.
it was equity or a loan, but I remember that from a long time
I
ago.
think you're right. Steve Jobs and Gates, they had a famous meeting. You're absolutely right. It was a large one. 500 million is the number that comes to my mind anyway. So act like the big businesses do, but at your own scale. And in fact, if you guys want to dig into this further, look up corporate-owned life insurance on the internet, or just check it out with AI, have a conversation with AI about it. Major corporations are some of the major purchasers of these designed whole life policies. So David, why did we write a book incorporating the tool of life insurance into this mindset of a business fortress? Make that connection for our audience.
Yeah, because of the flexibility. So first things first. Like when Mark and I set out to write this book, one of the first goals we had was that we wouldn't sell this book to a bunch of strangers on Amazon who would then go back and leave a 1-star review saying this is just a book about life insurance.
That's right.
So it's not. It's a book about small business, but we do talk about bank on yourself style life insurance policies as being one of the liquidity tools that people can use when they want to build their financial fortress around their small business. And the reason why I like it, and the reason why I've referred countless people to you, is just because of the features that differentiate a bank on yourself style life insurance policy from any other kind of equity pool asset. Like at the end of the day, when you put premium into a policy, you're just building this asset that is an equity position that you can borrow against. But what makes it different, say, that from real estate is that you don't have to qualify to borrow against it. You just automatically have access to it. So what I said earlier about the qualities of debt, is it a term loan, is it a demand loan, etc. What makes this debt so important and so precious, I think, to small business owners is that you can borrow the money out and the repayment terms are entirely in your hands. There's a section of the book about buying businesses, and I give two hypotheticals where somebody pays all cash for a small business or they borrow all the money for a small business. And it's not normal that you can borrow all the money for a small business. If especially if you're broke. I know there's people who say this on the internet, but it's just not a realistic scenario for most people. But if you had a big bank on yourself style life insurance policy with enough equity value in the policy to be able to do this, you could do that. And then if you had some kind of downturn in the economy or the business, lost a big client and you suffered from a cash flow point of view, you could actually say, well, I'm going to stop making payments back on the policy loan, which is a feature that very few banks are going to be willing to extend to anybody. Right.
That's right.
Like, so we
That's
we
right.
talk about the flexibility of this, that really you get to decide. And for myself personally, the reason why I have these policies is because my savings grow. I've got access to them anytime, and I do have children, so that when I finally reach the end of my days, like all that wealth is transferred through the tax-free advantages of the death benefit. So to me, there's a lot of small business owners out there who are looking at retirement planning through the lens that is portrayed out there in mass media through maybe what employees should be thinking about and the advice that works really well for employees. If you're going to mix up your personal sort of investment and wealth portfolio with your small business, which is the case of most small business owners, right? Then the Bank on Yourself policy tool just allows you to make long-term plans for the future that require your wealth, but then not lose the ability to use those finances and use that financial power for what might come up today.
It's a big deal.
Whether it's a problem in the business or an opportunity. And I think the opportunity side is sort of the bigger one, right? And I know that there's been all kinds of people out there that I've spoken to over the years who've had opportunities to do deals, and then they get sort of bogged down in looking at how they're going to have to pay penalties to take money out of retirement accounts, and they're going to have to pay fees and stuff to take money out of some other kind of savings, or they're going to have to try to qualify for a mortgage against a property that they own. Even though they've got the equity, they still have to apply to the bank for permission to use that wealth in doing the deal that they want to do. So not to say that those other things aren't important, and I think over the course of time people end up with an array of different financial tools that they have access to, even credit cards and things like that.
Yep.
But it's what we try to get across in the book is how you should think about these different tools and the roles that they should play in making your business stronger and more resilient and better able to weather a downturn and seize upon opportunities.
So true. I mean, there's so much in what you just said that I want to just underline, bold, and italicize. We are not through the hurricane of volatility on this planet just yet. There will be more moments, both macro and micro, where disaster strikes and also opportunity presents itself. And opportunity usually knocks on the door of people ready to open that door, to take advantage of that opportunity. And it's the people sitting on liquid piles of contingency capital. Maybe it's in a policy like we've designed. We talk about all forms of liquidity in the book. There's so much good stuff in this book. I feel like I could hand it to someone just starting out, like my photographer buddy, or someone who's in that, what do you think, maybe that 7-figure net income, let's say, range. Who is this book best suited for, from your perspective, David? And maybe who is someone beyond or not quite ready for, anybody that you would say is not ready for this kind of book?
Well, the business owner that I was thinking about when I was writing this book, like who the audience was what I describe as the Main Street to lower middle market entrepreneur. So that's somebody who's got a business that is providing cash flow to them, after all the expenses are paid. The cash flow to you as an owner is up to about $500,700,000. So which captures 95% of the businesses that are out there. Most of them are smaller. And so it's practical stuff for how to think about your business, how to think about risk, and lots of personal stories in there.
Yeah,
We've got some case studies in there from some
incredible.
of your clients. We've got some of my own experiences from back in my business broker days. You talk about your photographer having an up and down sort of cash flow scenario in their business. When I had my business brokerage office opened, there were some stretches of 7 to 9 months without a deal closing,
Hmm.
which meant no great amount of cash flow coming into my business. And so I was just on that cash flow roller coaster, and I didn't know about Bank on Yourself back then in those days. And I talk in the book just what kind of a difference it would have made for me in that business if I had
Yeah.
known about this product and if I had had it at the time.
Yeah, there's so many practical goodies in this book. The Financial Fortress step-by-step action checklist, it was just a lifesaver for anybody, almost at any stage in their small business journey, whether you're just getting started or you're cresting that $1 million, level, right, of net income to you as the business owner. So I'd say check the book out, try it out. And David, you were mentioning before we started a little bit about what we would like to encourage our early readers to do to help us get the word out, such as
Yeah,
a 5-star
please.
review, etc., if you think we deserve it. So would you mind telling our listeners what they might be able to expect if they leave us a 5-star review? Wink, wink, hint, hint.
Yeah, so here's the deal is go to Amazon, buy the book either on Kindle or the paperback, and give it a read and give us an honest review. Leave us 5 stars and take a screenshot when you do. Send it over to Mark. Mark, what are we going to do for
Yeah,
these people?
hello at nyafinancialpodcast.com. That's hello at nyafinancialpodcast.com. Make sure to take that screenshot of your verified purchase on Amazon, leaving us a hopefully 5-star review if you think we deserve it. And we will make sure you get all sorts of goodies. I've got a little shock and awe package I plan to send out. These would be additional books and checklists, some extra worksheets you can use as a business owner to become immediately profitable in your business day one on the first dollar you bring in. So we've got a number of different benefits and resources available to you, whether you read it for yourself or you hand it to a friend. As long as you've left us that review, take a screenshot and send it to hello at nyafinancialpodcast.com. We're asking that you do this in the first 90 days from this recording. So we want to get as many real reviews done as possible. We will give you extra copies of the book if you want to give it to friends. We will give you extra copies of other books that I've written, and I'd be happy to purchase some from David and get a couple of his books out too. Because David, this is not your first rodeo, my friend. This is like your 10th book, I think, right?
This is number 10. Yeah.
Wow,
Yeah.
awesome.
I've written a few over the years.
That's amazing. So thank you for letting me be a part of number 10. That's phenomenal. I'm looking for my first Pulitzer Prize. You're probably looking for your 10th. No, I'm just kidding. So once again, the name of the book is The Business Fortress: How to Grow, Protect, and Exit Your Business with Confidence. There's so much more that we couldn't get into this short episode, like exiting the business. How the heck do we do that? You got to read the book. That's how. You got to read the
A
book.
whole chapter
That's
on
right.
that.
And David has yeah, exactly. So David has a whole orbit of resources out there. David, what's the best way if folks want to get into that orbit and hear more about what you've done, the other 9 books that you've written and more? What's the best way folks can find you?
Yeah, sure. People can come over to to my blog site, davidcbarnett.com. Or if you just look up David Barnett Small Business on YouTube or any of the podcasting apps, you'll find me right away. I've got a YouTube channel with over 700 videos out there. If you're a business owner and you want to one day sell your business, I've got a website all set up, howtosellmyownbusiness.com. And in fact, a second edition of one of my other books is over there as a giveaway for free, actually, for people who own a business who are maybe thinking about their exit one day.
Fantastic. Thank you, David. Thanks for this opportunity to partner with you. It's good working with you, and you get, as an entrepreneur, one of the side benefits is you get to kind of pick your coworkers, and so it's been great being a coworker with you on this project, and I look forward to many more like it. So, and everybody, again, check out the book, The Business Fortress. Thanks so much, David, for coming on.
Thanks, Mark.